When you ask AI to find hidden gem stocks, it does not go looking. It predicts. It predicts what a good answer to the question sounds like. And here is the problem. AI learned what good answers sound like by reading the internet. And financial content on the internet is not balanced. It is bullish, it is confident, it is full of conviction. Investor decks written to impress, analyst reports pushing a thesis, Reddit threads full of people who already bought. If you have ever heard of herd mentality in markets, the idea that investors cluster around the same ideas because they all read the same sources, then you already understand the problem. AI does not just follow the herd. It manufactures the herd's confidence. It takes the loudest version of whatever everyone is already excited about and hands it back to you wrapped in a research report. In my last video, I ran the experiment 5 tools, same prompt, live verdicts. This video goes underneath it because I found 3 traps, each of them significant. Each of them the kind of thing that could quietly cost you real money. And once you see them, you cannot unsee. 4 months in, 21 videos, real money on the line. I run an 80-20 portfolio, 80% in boring ETFs, I do not touch it, 20% in individual picks, higher risk, higher potential. Goal, 300k in 5 years, in public. The 20% bucket is exactly where AI stock research could do serious damage, or great help. So I built a proper test. Structured prompt, market cap limits, cash runway requirements, insider ownership, red flags, 5 different tools, same rules for all of them. And I want to be honest about something. The first time I read one of these outputs, I believed it. About 20 minutes in, I thought I had found something real. And before I show you the 3 traps, here is the line I kept coming back to after all of this. AI can open the file, but it cannot sign the order. That part still belongs to me. Hold that thought, because I'm coming back to it in a bit. The first trap is the most seductive one. AI builds a story that makes you feel late. You read it and immediately think, how have I never heard of this company? That feeling is the trap, because what AI is actually doing is assembling the most confident things ever written about companies in that sector, presenting them as analysis of this specific company. It is not research. It is a highlight reel of someone else's conviction. In my test, wrong market cap range. Balance sheet significantly stronger in the report than in the actual filling. The narrative survived. The screening did not. A great story is not a buy signal. And right now, AI is the best storyteller in the room. The problem is, it is telling stories about companies it has never actually looked at. But I could work around the story problem. Okay, what came next I could not explain away. Look at this. Seriously, look at this. Bullet points, management commentary, risk summary, competitive positioning. This looks like something you would pay for. One AI gave me new scale power, said the market cap was around 650 million. Clean setup, compelling nuclear thesis. I pulled up the actual data. NuScale was around $4 billion market cap. Not 400 million, not 1 billion, 4 billion. That is not a rounding error. That is completely different investment category. And now here is the part most people miss. A human analyst who is unsure writes approximately or based on available data as of. AI writes the wrong number in the same font, same size, with the same confidence as the right one. There is no signal that something might be wrong. And because the answer is wrapped in a clean structure, tables, sections, bullet points, your brain reads the structure as evidence that the number is correct. That is not an AI problem. That is human psychology problem that AI accidentally exploits. Tables feel rigorous, sections feel thorough, risk summary feels balanced. So you trust the number inside it without realizing you have never actually verified it. And I thought I understood the problem after that. Then I noticed something I was not expecting at all. I ran this test across 5 different tools. The companies change every time, or almost every time. The narratives did not. AI power demand, defense budgets, nuclear energy, quantum computing, space infrastructure. Every session, every tool. Now remember what I said at the start. AI predicts what a good answer sounds like. And the most plausible sounding answer to find hidden gems, based on everything these tools have ever read, is whatever narratives has the most momentum in financial media right now. Which means there is a structural problem nobody talks about. The truly hidden gem, the one with no coverage, no hype, no ready thread, is invisible to AI, because there is nothing to train on. The companies that show up in AI outputs are there precisely because they are already being written about, already discussed, already speculated on, already partially discovered. So when AI hands you a hidden gem, it is the loudest version of what everyone is already excited about, wrapped in a language that makes it feel exclusive. That is herd mentality with a research report stapled to the front. And markets do not reward being exactly on time with everyone else. So here is where I actually land on this. I use AI every single day. Generating ideas? Yes. Summarizing earning calls? Yes. Building research checklists? Yes. Finding the bull case and the bear case fast? Yes. Stress testing my own thinking? Yes. That works. I'm not giving it up, but market cap? Verify it yourself. Cash runway? Check the actual filling. Insider ownership? Do not trust it without a source. Final buy decision? Never. The rule is simple. If the number matters, check it. Because AI cannot tell you when it is uncertain. Here is the conclusion this experiment pushed me toward. The boring 80% of my portfolio, the ETFs I never touch, suddenly looks more important than it did before. Not because ETFs are exciting, because AI makes excitement cheaper to produce. One confident looking output, wrong market cap, inflated balance sheet, compelling narrative, that is all it takes. One bad decision in the risky bucket can erase months of gains in the boring one. Maybe even more. The boring core does not just build wealth, it protects you from the version of yourself that reads a clean research report and wants to believe it. So, back to where I started. AI can open the file, but it cannot sign the order. Use it for ideas, use it for summaries, use it to challenge your own thinking. But if you need AI to explain why you own something, you do not own the thesis. AI does. And that is not where I want to be with my money. Now, here is what this made me want to test. If AI stock picks sound this polished, can the most boring ETFs on earth still beat them over a real 90-day window? Real money, real AI picks, real ETF. Head to head. Because if the answer is yes, and I think it might be, then that changes the entire approach to this experiment. That is the next video. Subscribe so you do not miss it, or you will hear about the results in someone else's comment section. Real money, real decisions, real mistakes, real adjustments. We are finding out what actually survives contact with reality. Thanks for watching. Bye bye.